If I start with the highlights, and they are highlights, overall the group has seen good revenue growth. We've seen a 12% growth to 54 million. And the growth has come from both parts of the business. Escrow's continued the trend we saw at the IMS and has grown by 7%. And Assurance has continued to grow in line with our expectations in the market that is very buoyant. It's grown by 15%, of which 13% of that is organic. The key acquisitions that we've had are all bedded in. We're now actively looking in the market for new opportunities there so that we can continue to capitalise on a very significantly growing marketplace. Escrow has seen continued good performances, both in Europe and the United States, and I think all the problems that we suffered this time last year are long behind us. And therefore the profits have grown by 8% to 9.4 million. I think the most interesting and exciting part is the very smallest part of the pie. Artemis has acquired an uncontested GTLD. Now, what on earth does that mean? Artemis, as you remember, is the business that we've set up to make the internet a safer place. The whole principle of it is to create the gated community from which organisations will be able to operate with a high degree of safety for their customers. You may also remember that the process that was adopted by ICANN to ask for new applicants for GTLDs, top-level domains, created a massive rush to acquire names. There were 1,804 applications, and if you bear in mind that today there's only about 20 domains anyway, you'll appreciate the scale of this problem. We applied originally for .secure, and we were in a situation whereby another organisation, Amazon, applied for the same one. The process that's in play is now to go to an auction, and basically it will come down to the highest bidder will get that domain. Now, what I've said all the way along is that the whole business works around the fundamental principle of creating a gated, secure community. The name and that particular domain, whilst it's important, doesn't matter. What I've always said is we'll have a plan B, and the plan B is actually to buy another domain. We've actually done that, we've achieved it, we're dotting the I's and crossing the T's, and we'll be able to tell you what that domain is. It fits very much in keeping with what we are doing, and the name is very appropriate, and it will therefore enable us to launch the service as we planned on the 1st of June to paying customers properly. Now, at this point in time, we do have customers. We have beta customers, and those beta customers are reverting into paying customers over the next coming months. We also have the opportunity to provide the gated community, the secure environment, to other customers, customers who have their own GTLD. And that, again, was always part of the proposition that we were putting out. So actually now having the rights to a GTLD of our own is a really fundamental step forward. Not a surprise to us, but it is actually a really positive piece of news, and therefore we really do believe that the investment community will look at that in the positive way they should. It makes everything that we're doing very, very real now, as this service will be launched on the 1st of June properly. Obviously everything comes through to the bottom line, and we've seen good EPS growth, and as we've always done, we've grown our dividend in line with what we said to the market way back when we floated, but progressively, and we've followed earnings and grown the dividend by 16%. The track record is always worth referring to. Compound annual growth rates of revenue of 27%, 17% of adjusted operating profits just show what a strong, consistent performance we've achieved over the years, and this year we're on track to deliver another good year.
We've had a strong first half to the year, overall revenue growth of 12%, almost all of it being organic growth. What's been very encouraging has been the improved growth rate in the escrow business, 7%, and particularly in the cornerstone UK business, which grew by 7%. Escrow Europe has returned to positive growth in the first half, and the two US businesses, which now operate under a single brand, Escrow Associates, are also performing well, showing an 8% growth. Our Assurance division has grown very strongly, 15% overall, 13% organic. And driven by the increased international security market, you'll see that the growth of the security testing business is 16% and 15% organic. So we're capitalising on that growth in the market. If I move to profitability, our profitability of escrow has grown by 8%. Margins have slightly ticked up from 56% to 57%. Our assurance business profitability growth by 15%. Margins have remained at 16%. Our target continues to be 20%, and we're pushing hard to drive the margins up in that business. If we look at the overall profit margin has moved from 24% to 22%. There's two factors. Firstly, the Artemis spend that's gone through the P&L has impacted the margin, and the other being the change in mix of business. So a greater proportion of our revenue is now assurance, and hence lower margins. When we look at adjusted operating profit, that's grown by 4%. But again, if you look at exclude Artemis, that growth increases to 11%. Adjusted fully diluted EPS, that's grown by 16%. Now, the reason for the higher percentage than the operating profit is to do with the tax rate. Our tax rate has moved down from 29% to 22%. A couple of factors, one being the decreasing UK tax rate, the second being Artemis expenditure and the tax treatment of all Artemis expenditure, which gets tax allowable in the US. As Rob mentioned, we have a progressive dividend policy, and in line with the EPS growth, dividends, the interim dividend is proposed at 1.14p, which is an increase of 16%. If I just briefly talk about the reconciliation between what do we adjust for in terms of reported operating profit and adjusted. The largest item there is to do with the release of deferred consideration in relation to Intrepidus. That goes through the P&L, so we've adjusted for it. Basically, we've concluded the earn-out, we've agreed a final payment, and then integrated the business with our other US security testing businesses. Exceptional legal cost, 0.2, that relates to legal costs associated with our abandoned SAP implementation and the costs associated with pursuing Cyber UK, the systems integrator, and I'll come on to that in a little while. The other two items are normal, amortization of acquired intangibles and share-based payments, which we have every year. In terms of balance sheet, continue to have strong cash conversion, 104%. Net debt of 26.2 million against a facility of 40 million. In terms of CapEx, total CapEx has been 4.5 million. 1.2 relates to Artemis. And 1.3 relates to our investment in products and services. So specifically, we've invested in the infrastructure for SaaS and registry data escrow, and also invested in product upgrades within our web performance business. The other item of CapEx there is the new IT system, and I'll come on to that in more detail. Finally, in terms of the balance sheet, we've got deferred consideration of 4.3 million. Most of that relates to Matasano. We've made the first payment of 1.7 million in December, which was the full first year earn-out. The second being payable at the end of this year. And as I mentioned, Intrepidus we've settled, and that payment will be made this month. So in terms of the IT systems, mentioned we abandoned SAP in May 2012. We've gone through a mediation process with Cyber. Unfortunately, we were unable to settle, and we're still committed to seek resolution through the appropriate legal channels. In relation to the new system I mentioned, what we've done is based on upgrading Sage and Sales Logics, which are our existing systems, so kind of more recent versions of those. The rollout plan is based on creating a template in the UK, which is our largest business, and then rolling that out internationally. The plan is to complete that by the end of this calendar year, and total spend is expected to be approximately £3 million. Finally, in terms of the cash flow, so what have we used the cash generated from operations? Most of these items are standard. Key figures there is the CapEx, which I mentioned, and the others was our progressive dividend policy, so you'll see the dividend of 4.4 million there as well.
This slide now just reflects very much the change in the shape of the group, as we're seeing much more come from the rest of the world. And this will be a continued trend as our businesses grow in North America, particularly through the assurance division. And this is an area we do see for continued growth. In the escrow division, you can see that we have good revenue growth, good contribution growth. We're operating from North America, Europe. The North American business is now very stable, very consistent, and the European business is growing. But the key cornerstone will always be the UK business, where again we've seen a very positive level of growth coming forward. We have diversified a little bit to push more in the areas of SaaS, which again, for those of you who have seen us talk on this area before, is exactly the same as normal escrow. Anybody who takes a SaaS solution still needs to protect themselves from the difficulty that would happen if that supplier goes out of business. An area of opportunism to us has been ICANN, and as we've discovered more about the domain world, there's an opportunity to provide escrow opportunities to the ICANN environment for domains. So we've moved into those areas, and that's predominantly an American type opportunity. Renewals continue to grow, and terminations continue to stay at around about 12%. And that trend we expect to see continuing going forward. And again, just to set out the two smaller parts of the organisation, 8% revenue growth in the US is very positive. I would expect that to move into double digits for the second half of the year. And Escrow Europe this time last year, you may well remember it was a negative growth. To move it back into 5% growth is positive, and I'd like that business also to return to double-digit growth in the coming period. Assurance. We seem to have offices everywhere. I think we've moved into property now. 17 offices globally, operating a follow-the-sun tactic, which means that we can support any customer, any time zone, anywhere, with pretty well any technology covered. And that's very much what we aim to do. You know, we aim to be the experts. Remember about NCC Group, we don't do the same thing twice. Everything we're doing now evolves and moves on. The whole area we work on is the niche areas, the developing areas, the areas that are going to come up next. And that's why we continue to be able to maintain our margins. And it's also why we continue to see very positive growth. 15% growth is positive, but the key bit within there is actually the level of organic growth of 13%. Margins are 16%, and they will push towards 20% as we go forward. Key thing in our business is people. Over 300 security testers. It's actually 334 if we want to be specific. And that will continue to grow. We are the place to work for now. You will see in the market a lot of consolidation. We're going to see a number of the big players merge up. We've already seen things like Mandiant. We've seen smaller players like Context get taken over. This trend will continue, and actually that creates an awful lot of opportunity. The biggest problem with bringing together small assurance businesses is maintaining the cultures that they've thrived in. This is the one thing we're extremely good at. Equally, creating the research centres to get them to be able to provide the know-how knowledge that the individuals need to work on clients and to find the thing that happens next. Ours is very much recognised, it's responsible in terms of the way we disclose it, it's credible, and it's also now coordinated. So we have a fairly unique capacity to pretty well unlock just about anything. The security market itself is going to grow considerably. This is going to be a huge opportunity for us. In the UK, we're going to see a lot more on operational response and a lot more on forensics. I'll talk a little bit about the FT350 organisations who really don't know what they're doing. But I think from that we're going to see a huge outpouring of forensics. Today we're seeing a lot more of it. There are some great viruses and bugs around. Most of the UK companies seem very adept at catching them. In the rest of the world, you may remember that we acquired a business in New York called Matasano. That now is our East Coast brand. A very, very strong business, growing incredibly well and operating with some of the greatest and best organisations in North America. On the West Coast, as you know, we work with the great and the good in the internet world and the software development world. And ISEC therefore becomes the West Coast brand. And again, it's making it very clear, very easy to buy from. So again, we're going to see very good levels of growth. The web performance business is important to us. It's the bit that created our managed services division. It's the bit that taught us about automation and 24/7 monitoring of organisations. It is important, but it has got a lot smaller to us. But even so, we've seen good growth levels and we've seen good renewal rates. It will continue to grow and is an integral part of what we do. In the assurance market today, I think it is fair to say that nearly every organisation we come across these days has been hacked. Sadly, most don't know it's happened to them. Too many boards today come up with the view that we'll cross our fingers and hope it goes away. Too many people believe that the legal department can minimise the amount of work that needs to be done to protect themselves. The big push we've got at the moment is to try and make people wake up. Cybersecurity should sit at item number 3 on the board agenda. Number 1 should be performance, number 2 should be succession planning, number 3 should be cybersecurity. There are a large number of organisations that are a huge risk at this point in time. The threat has never been so real. The latest little bug that people are picking up is a very kindly sent PDF that's got a little piece of software called Crypto Locker in it. What that does is it very kindly locks every single file on your computer. It encrypts them. You cannot get to them. It also, as soon as it's connected to a network, finds the next network node and will spread like Topsy through the organisation, locking down every computer it comes to. And then it will very kindly issue a ransom note, which the organisation will have to pay in bitcoins. Had to be a purpose for them somewhere, didn't there? And most organisations are just paying up. Now, people think that can't happen to us. It nearly happened to us. If it's happening to one of the world's leading security providers in terms of we actually picked it up from a client, imagine what's happening to the rest of the world. This is such a big area of growth opportunity if people wake up to treating it responsibly. And responsible is what Artemis is about. Artemis is absolutely everything that organisations will need to do. As I talked at the very start, the proliferation of GTLDs makes the internet the equivalent of the Wild West. Although quite frankly, I prefer my chances in the Wild West than surfing the internet when there's 1,804 additional domains. Clients are having to register hundreds of domains to protect their brand and protect their image. One of our clients has got 1 million domains registered to them already. The big problem is you just do not know who you're dealing with. You don't know what's a trustworthy site. You don't know where you can go safely and how you can get connected safely. And you don't know if the organisation you're dealing with is actually going to allow you to download malware. What the secure world does, the Artemis world does, is it removes all that doubt. It's as simple and it's as straightforward as that. It will actually allow you to know who you're dealing with. It will allow organisations to be able to very safely create environments for their customers to transact. Without it, the internet isn't quite doomed, but it hasn't got a long-term future in the way that we operate, because it becomes far too virulent and far too compromised. In terms of what we're doing, we're obviously building all the platforms and the portals and the support mechanisms to provide a secure relationship for those customers. We actually provide tools that will be testing the website at all times and protocols and procedures that clients will adopt to make sure that everything they do is of the highest standard. There will only be a very small number of domains that will offer this total protection. I'd like to believe through the auction process we'll have .secure as one of those, but more importantly, the new domain that we've got will be the one that we start with. And it's not .cotton, by the way, for those of you who thought of that, although I did quite like the idea. But that will provide a launch platform from the 1st of June. To date, we've spent £2.6 million on the project. And we do expect to spend about 8 million by the end of the investment period. It is on track and it is on time, unusually for an IT project. We're very confident of coming to the market on the 1st of June. In terms of the customers, yeah, I'd love to talk to you about who they all are, but you can probably guess a number of them. Yes, we do have 2 beta customers who are using the service. Yes, they are going to a paid-for basis in the next few weeks. The 30 pioneers are the great and the good. I've left enough ideas out there who they might be. Internet giants, social media, etc., etc. They all have a very vested interest in making the world a safer place. It's very topical in North America at the moment. And I'd like to believe that as we get to closer to the 1st of June, we'll be able to give a little bit more information and guidance about how the whole service works and who those early adopters are going to be. But I have to say, the most important part for NCC Group over the last 6 months has been securing a domain to allow us to get this service out. It's very heavily supported by ICANN. ICANN and the associated countries in ICANN are very keen for this to happen, and therefore for us to actually secure this name is probably the most positive news I've had in a long time. And that leads us to the conclusion of where we are. Yes, of course, I'm going to say that the acquisition of the uncontested GTLD is the best piece of news, but more importantly, the underpinnings of the business are really sound. Escrow is structured to continue to grow. We're actively recruiting and we're looking to continue that growth curve. The landscape in the security environment is the worst it's ever been. That's the best it could ever be for us. We're growing, we're integrating, we're recruiting. And that leads us to the position as we come into the second half of the year. We've got an order book that is about 11% stronger than this time last year, and therefore, looking at the numbers that we have to be very positive about the future of the year, and we're looking forward to continued strong growth.